Hi, this is Randy Finney with Right Side of the Chart, and today is Monday, June 11th, 2018. As we head into the week, the trading week here, I wanted to go over a few things that stand out to me. Not This won't be an all-encompassing list, just some of the sectors and indexes and developments that I'm watching for. Before I get into the charts, again, I wanted to reiterate that we have the FOMC rate announcement scheduled for 2 o'clock Eastern Time on Wednesday, and it's not it's we already know what's going to happen. It's baked in the cake. We're going to have a quarter point rate hike. Fed funds futures are indicating a near certainty of that. No more, no less. But what's more important is what the Fed comes out and says afterwards, on their future outlook, whether they're going to be more hawkish or dovish going forward. So typically, it's been my experience on FOMC announcements the week of, the few days leading up, the markets tend to go into a holding pattern. So I don't expect a lot of fireworks between now and then. As I always say, if something changes, we'll react to it. But you're probably going to see some sideways grinding in the market, nothing big. But if there's any standout trading ops, I'll be sure to point those out. All right, so with that being said, let's just dive into the charts and I'll tell you what I'm watching for. And again, we'll see as we close the week where we finish. This is QQQ. This is a daily chart. And I mentioned last week we had on Thursday a bearish engulfing candle, just as we had one back here at the top. We had one back here, and they're fairly reliable topping sticks if you have confirmation. Now, what happened is I like to see red candles afterwards, like we had here. We had three red candles to confirm that bearish engulfing candlestick, and then we really started the impulsive sell-off after that point. Friday, we actually closed flat. The Qs closed up 1 penny above where they closed the previous day. That's why you have a green candle. So that, a penny lower, it would have been we're talking almost just over half a percentage point positive. So that was really a flat close. So don't read too much into that being a green candle. Today we're up so far, and again, the day is still very early. We're up 3.37% right now. Let's just see how we close the day. And again, due to the fact the Fed does have that rate announcement, I expect this week to look something along the lines of this, some sideways trading here for a few days. So again, let's just see what happens, and most importantly, how we close the week. That's what I think will be important. All right, so there's the daily chart and the same story. We're building divergences, slightly marginal new high. You notice we did recently pop to new highs on the Qs, but we didn't hold those highs. Again, that was followed with that bearish engulfing candlestick, so it was a failed breakout to new highs. But we're not seeing impulsive selling yet. And again, I think that's normal because of the FOMC meeting coming up. There's a trend line we could draw. Let's look at the 60-minute chart real quick. And you can see there's that same trend line I just drew on the daily chart. So this is what we need to watch. It's pretty well defined. We have 1, 2, 3 reactions along that trend line so far. We do have a divergent high as well in the 60-minute chart here. And even if we punch up this week, let's just say we take out the recent highs, we will only have extended the current divergences that are in place. You can see down here the indicators are lagging. Now, on the flip side, I'll play devil's advocate. I do see, what I do like about, or at least what looks bullish, the PPO is starting to curl up above the zero line. And I talk about this a lot. It's a simple yet very effective trend indicator when the signal line right here, the white line, the 9 EMA is trading above the zero line, the trend is bullish. When it's below, the trend is bearish. So you can see I boxed in, told you right there that the trend was bearish. Did a good job of keeping you short or out of the market during that downtrend. Again, bullish, so you get the point. Pretty reliable, and you can see, and I often talk about this, once above or below that zero line, the dotted line there, that zero line tends to act as support when prices are above, as it did here all along. And so there it is. This is you see the PPO curling up into telling you, and it has told you since this point right here, that the trend was bullish, and it's kept you long all along. So that's why we don't have a short trade on QQQ, but I'm watching this again, the divergences, the uptrend line, and we're not, we could quickly, especially if we do break this trend line, we'll most likely put that trend indicator on a sell signal. So that's what I'm looking for in the 60-minute chart. And again, I don't expect a lot of fireworks, but we'll see. You have to react to what the market does. There's some support levels, targets, all that. Let's move on real quick. Just look at the top components, and they also, the charts, the top components tend to mesh well with what I'm seeing on QQQ on the 60-minute chart. This is Apple, the largest of the component of the Qs and of S&P 500. We had this recent island cluster top. You can also see this on the daily chart. You'll have just fewer candlesticks. We're looking at a 60-minute chart. If I don't make mention, guys, it's always up here in the left-hand corner what time frame we're working off of. So you can see we had this island. This is called an island cluster top. We have a cluster of candles. We gap down below, and we're still below that island. So this is bearish, and if we continue, or if we start to move down, and I think we will. I mean, we look at just based off the charts. There's mixed signals. Trend indicator is back testing that zero line. You can see on Apple, it's done so well. It's been bullish since this point. So we can't write off Apple just yet, but we have this divergent high that says a correction is likely, but we don't have. Well, you could say this is a sell signal. A lot of times I will short. And you want to short Apple, I can tell you it's an objective short trade. Um, but when you have an island cluster top like this, what you do, there's the island. You can see two red candles so far. We gap down below that puts the island in place. An island's just a cluster of candlesticks up there. And what you do, you're trading the MO for trading these is you short on the gap down, and you have a stop not to at the most above the recent highs. Because if we move back up, take out the highs, then you've negated any possible island cluster top. But as of now, that's in place. So, it's all about risk reward. The downside is minimal. You're talking, if you're stopped out, about 1.5% or so if you put your stop above the top of the island. And the downside potential, profit potential on a short is huge, because that isn't just a short term. This is a daily time frame we're talking here. And if that fairly high probability topping pattern plays out, you're probably talking a move down here at least to that 175-ish area, possibly more. That's about an 8% drop. So again, trading is all about taking trades that have a high probability of chance of playing out and offer an attractive risk reward. You risk a dollar to make five. That's a great risk reward ratio. All right, so there's Apple daily chart. We can go through all these. I don't want to bore you with details. We've gone over these charts quite a bit lately. These are the top components of QQQ. There's Amazon on the daily time frame, negative divergence, big rising wedge, and we look at the 60-minute chart. Same story as a lot of these. The PPO, we have negative divergence. You have an uptrend line here to watch, and again, the PPO trend indicator is still bullish and turning up right now. So that's why probably best to hold off on shorting the Qs. Again, probably best. At least maybe wait till Thursday. But if you want to take a starter position here, I would then hold off and add after the FOMC meeting's out of the way. So same story. Again, another 160-minute chart. Here's Alphabet GOOG. PPO curling up on the 60-minute time frame. Microsoft looks like it's doing the same thing here, about to curl up. So that's the story. Again, these are the top components of QQQ. These are QQQ for the most part. These top 5 or 6 stocks. Intel, and I'm going to get to this. This will segue into the next chart on the semiconductors. Intel has broken down. There's not, anything I can say. Anything I can see any reason not to be short this stock. I think it's going lower. We had a divergent high, bearish rising wedge. It broke down. Trend indicator is bearish here on the 60-minute chart. And more importantly than the 60-minute chart, we have a clear breakdown on the daily chart. And a very well defined. These yellow lines are a large rising wedge pattern confirmed with negative divergences. We broke down. Had a solid red close below the wedge on Friday, and we're following through again to the downside today. And Intel, of course, being one of the largest semiconductors, that's not good for the sector itself. This is SOXX, one of several semiconductor ETFs. My favorite trading proxy for the semis. Same index that SOXS and XOXL, the 3-time leverage long and short semi ETFs track. And you can see again, clean up trend line, break and close below on Friday, more follow through downside so far today, and divergent high on the daily chart, everything you like to see. So where I'm going with all this is the semis are a big component of the tech, And if the semis drop and tech falls, tech is the majority. It's the largest component sector in both the Nasdaq 100 and the S&P 500. So tech stocks aren't looking so good, and that would certainly, if this plays out, here's that first target on the last trade we have that was just stop was just clipped here. I may add this one back as an official trade. Again, I'm trying to keep things relatively light in front of the Fed, but we'll see. But if you are short the semis, I think this is an ideal target down here. We've had a lot of reactions right here so far. 1, 2, 3. We have a double top high right now, and look for a move down to the bottom of that and possibly a downside break. We'll have to just see how things look when we get there. So that's SOXX. Now let's roll into the biotechs. Biotechs are also, pretty significantly weighted in the Nasdaq 100. This is XBI, the Spiders S&P Biotech ETF, and I mentioned this recently. We have divergent high as well as a triple top high so far, with three peaks right here. It's this 97.90-ish level that XBI, the biotechs, have been struggling with. And then we did also have a bearish engulfing candle last week. This candle here on Thursday engulfed the body of that previous candle. And we have two follow-through red candles so far. Biotechs are again down today. Like I said, negative divergence, PPO crossing down right now, about to cross over to the downside, confirming that divergence. So this looks like another sector that's headed lower and could give the broad market some headwinds. You could draw an uptrend line right there, and that would probably show well in the 60-minute chart. And let me show you something as well. This is my preferred trading proxy. As for an investment, if I'm going long, if I'm going to hold on to it, because XBI, there's several biotech ETFs out there, but this is diversified. We have, let me show you something. All right, so XBI, this is off their website, Spiders Biotech ETF, and you can see the weighting. This is a very well balanced. There's a lot of components, and it's not overly top heavy with any of the top components. Are all you can see here. The top, what is that? About top 10 or so, range from 2% down to about 1.6%. So a very well diversified ETF. This is the way ETFs should be, in my opinion. And I'm going somewhere with this. They're not all like that. For example, there's another biotech ETF that people trade is IBB. IBB is the iShares Nasdaq Biotech ETF. So you're going to have stocks that are all within the Nasdaq index, Nasdaq exchange. So there it is. And you can see here, where is it? I had the holdings. There it is. Look how top heavy this is. And I'm going to show you the chart here in a second. You need to know what you're trading when you pick an ETF or sector, because in this one, you have just these top four stocks. That's over 30% right there in Biogen, BIIB, Biogen, Amgen, Gilead, and Celgene make up over 30%. So about 1/3 of the performance is coming from just four stocks. You're not very diversified if you invest in that one or trade it. Wrong chart. Let's go back to where we were here and look at. So again, XBI is testing its highs right here. Those three highs could break out to new highs soon, but again we have that divergence. But then you look at IBB, and you can see this one's been lagging. And there's the chart. You could also draw a trend line here, but you can see how far off the highs IBB is. Not even anywhere close to its earlier highs back in January. This one's making a series of lower highs, and percentage terms, try to give it to you. I showed you XBI just off, challenging those previous highs. This one's down 8% off the highs. And why is that? Well, of course, because it's top heavy into just a handful of stocks. The ones I just showed you, BIIB, Biogen. Look how far Biogen is off the highs right here. And you can see Amgen, AMGN, same thing, well off its highs, GILD. And obviously, so these charts are, reflected into the charts of IBB. Okay, so then it's their Celgene. I mean, Celgene looks pretty attractive, looks like a potential bottom in play, but again, well off its highs even earlier in this year. Here's a year mark right here, January, and you can see how much it's down. So there's a sector to watch, again, more so on the developments on XBI, because XBI, as I said, is more representative of the biotech sector as a whole, where IBB is most representative of just these four stocks for the most part, or to a very large extent. Again, about a third of the performance coming from just four stocks. On a related note, I know we started out with QQQ, and just to back up to that real quick, you need to take a look at what is QQQ made of, and I've always talked about this. I jokingly refer to QQQ as a tech ETF with an Amazon kicker. Why is that? Well, 62%, about nearly two-thirds of that, is technology. The red here represents the weighting in technology, and then of that, but next down we have consumer discretionary at about 22%. So nearly a quarter coming from consumer discretionary. Now we look at XLY. Here's XLY, the consumer discretionary ETF. And as you can see here, because Amazon is so large, and the same thing holds true. It's a very top heavy weighted component QQQ, and it's also 22% of XLY. So if you're trading XLY, you think, well, I have a well diversified basket of consumer discretionary stocks. No, you don't. You have Amazon. You have nearly one quarter of your performance coming from just one stock. You can see everything else is a distant second. Home Depot and Netflix do certainly, and Disney make add to it. But then when you start getting down here, look, you're dropping off. You're in the top 10 components, and Starbucks needs to move nearly 10 times what Amazon does to give the same effect, because it's about 1/10 of the weighting Amazon. So that's what I wanted to point out. We have, again, consumer discretionary is the second largest, and then so to do that, we really need to look at the charts of Amazon, which I think I hit on earlier. If not, there's Amazon in this rising wedge pattern. So this is a very important stock to watch for both the, NASDAQ 100 and that sector as well. And the market is also, a very, very top-heavy component of a lot of, the S&P 500 as well. And just a quick look at the futures chart. Here's a trend line I've highlighted recently. We broke down, back tested, break down a quick back test, thrust down, and now we're coming in for another back test of that trend line. So keep an eye on this. Again, a little more upside, but you can see divergences in place. Even if we were to pop to new highs, take out the previous highs, if we do so soon this week, then that will almost certainly, as you can see here, I can extend these divergence lines, and we'll still have negative divergence here on the 60-minute chart of the NASDAQ 100 futures. While I'm on these futures charts, we'll look at gold futures, and we'll look at GLD and some of the other metals, the ETFs. Here's gold. I still like gold. Been bullish for a while. We're not really going anywhere, but it is forming. You can see this triangle type pattern here. There's a downtrend line to watch. Again, this is a 60-minute chart. There's some resistance a little bit above it, but gold really seems to me like it refuses to go down. It's not really going up much yet. We can see that. It's been in the sideways trading range, but I do like it. Let's look at GLD and some other things real quick. Go back to this chart here. Load GLD. And you can see that, again, uptrend line support on the daily chart. Same things I've highlighted recently. Go back to the late 2015 lows. There's a nice uptrend line we're at on GLD. And again, looks good to me. We don't have a screaming buy or anything remotely close. Let's look at the euro, because it's all about the dollar and the euro. Euro broke below, euro US dollar pair broke out of this downtrend line, broke above it, this falling channel here, and has moved higher since. And again, weekly chart paints a longer term bullish picture, in my opinion, with this basing pattern, multi-year basing pattern here in the euro US dollar. We did have this rising wedge recently with divergences. It played out for a sharp correction, but we fell right back to back test the top of that basing pattern here, which is a pretty significant support level. So that looks good. And if this continues to play out, that means as the euro rises against the dollar falls, and that should give a tailwind to gold. SLV, silver ETF. The story is this sideways trading range in 2018. You can zoom in there. You can see the purple box. We had a brief period where it popped above there for 3 days, put in this island cluster top, and then fell back below it. But however, from there, and we did correct, that was bearish, you see an island cluster top. But what we did is we fell to the bottom of that, back into that channel, I'm sorry, sideways trading range, and have traded. I mean, you can see we've moved up and down, and now we're back challenging the top of that channel. So if we break out, it's a very well-defined pattern. If we break out, that's going to be bullish. That's the bottom line. And of course, if we reverse here, resistance is resistance until unless broken. I often say, you could certainly short silver here. I'm more apt. I'm positioning, currently positioned and also expecting this to break to the upside. And then you have this downtrend line to watch. Pretty well defined. 1, 2, 3, 4 reactions so far. So that's what I'm looking for on silver. Your first buy signal will be a pop above that trading range. Second buy signal would come on a break above that trend line. And then I think you could probably see a pretty sharp rally in the metals if we get that. So let's keep an eye out for that. The other one I like, the other shiny precious metal is platinum. Platinum has this downtrend line. Same story. If you're new to my analysis, I've highlighted recently how well this support level is. This was a false breakdown followed by a very powerful rally. We had another false break of that level here, and I'm referring to 85.15, that orange line, and we're above that. We're back above there again. Now, we haven't had the explosive move like we did the last time it recovered that level. But again, you can see where we have a downtrend line. We're above that downtrend line, but this is not an impulsive breakout. Again, I wouldn't expect it to be. The market is on hold. Platinum, silver, gold, they are very much dollar sensitive assets. And so therefore, what the Fed does, what they say on Wednesday afternoon will almost certainly have an impact on the US dollar and likewise the precious metals. So don't expect a lot until then, but this looks good for now. And we'll just have to follow up later in the week, see what happens. Not really worth spending a lot of time on GDX. It's still an official trade. We're still about break even or somewhere, somewhere we entered somewhere in here. These are the targets. There's a stop, 2190. We're still, haven't been stopped out. It's gone sideways because the precious metals have gone sideways. So, ultimately gold's going to follow, or GDX will follow gold. So if, my call on gold is correct, then this trade will play out. And if not, then we're stopped out and we move on to the next one. Here's an update on XLP. I did that video on Friday, 2 videos. There were so many, if you've watched those videos, you know what I'm talking about. There were so many individual setups that stood out to me. The majority were bullish, and as such, you're seeing this breakout in XLP. We're following through today. This looks about as good as it gets. You have this a lot of impulsive buying. Look at this near vertical rally since we broke out. This yellow line was support defined by these reactions back here. We broke support, and then again, it's probably all covered in the video. We had this ascending triangle pattern, and we regained that level. And there's, as I often say, fewer things in trading are more bullish than a failed breakdown, because when you break support, shorts pile in, weak-handed longs get shaken out, and then you get a new set of buyers in here on the long side, and you also have the shorts getting squeezed. They're covering. They realize they shorted a breakdown that didn't stick, and this is definitely the point of recognition for them. So, like I said, this is one of my favorite sectors right now, and it's also, it's also makes up about 8% of the S&P 500. So, there's some sectors that look better than others. In a long end of it, I would not at all short the S&P right now, but I do. Where I think we're going to see weakness, and we're starting to see it already, is in the tech stocks, the FANGs, so QQQ. So my guess is that SPY will outperform QQQ in the coming weeks here, and usually it's the other way around. QQQ, the tech-heavy QQQ, high beta stocks, usually outperforms to the upside. But that's, like I said, I see some decent developments here in some of the sectors in the S&P 500. And we'll just wrap this video up here. These are a few of the video that I did on Friday. These are some of the components I covered. I just want to highlight those. SJM, JM Smuckers, right at trendline resistance now, up pretty nice today, about 3%. GIS, General Mills breaking out. I had this resistance level here, about 43.21. Nice big green impulsive candle through there today. CVS also breaking out today over that 66.60 level. Kellogg has this resistance right here. It's challenging now, up about 2%. CPB, no, that wasn't one of them. KR was one of them covered. KHC, I added this as an official trade idea today on this breakout here above the that downtrend line that I highlighted last week. So, like I said, that's right now one of the sectors that stands out to me as an attractive trading op, and good for dividend investors as well, because these are dividend paying stocks. This one's yielding over 4%. We'll wrap it up there. I think I covered everything I wanted to. So again, I'm not doing anything crazy this week as far as positioning, and I expect a little sideways, chop back and forth. So try not to read too much into what happens this week. But by the end of the week, we'll have a pretty good idea, or we should, on which way this market's headed. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.